Crazy weekend, and markets are open. Uh, let's get into it. A lot to discuss today on Money Never Sleeps. Welcome back to Money Never Sleeps. Before we get into anything today, nothing we say is financial advice. I'm not a financial advisor, just me and a couple of guys who are usually on the show that love talking about the markets and just giving your opinions and takes on things that are happening in them. Consult with your financial advisor before you make any financial decisions or just do your own research. That being said and out of the way, no J-Web today. He's out of town, and I literally just decided to do a show. We weren't going to do one today, but obviously this is a major weekend. And to not do a show based on what happens and how markets will react, that would have been a opportunity missed. So we're going to take a look at everything that's happening since the attempted, I don't know if I can even say it on YouTube, but the attack on Trump, and seeing if the markets are going to start pricing in things. And because it seems like there is a lot that can be priced in. We got a lot of news that is coming out today that's going to be important. As a matter of fact, in just about an hour and a half or so, should be getting some news on a potential vice presidential candidate for Trump. So, yeah, I'm not going to comment on anything that happened over the weekends. We're just going to look at the financials, and then maybe we can talk about it at a later date. But for the time being, let's look ahead this week and see what we got. It's a pretty quiet week necessarily in terms of the economic calendar. So I'm going to share that right now with Market Watch. And we can take a look at the fact that we are looking at Empire State Manufacturing that came in today. It looks like it was contracted even worse. Not necessarily a good sign. Powell did speak today. I got a quote pulled up from him that we'll take a look at in a second, and a take that I think we need to discuss because I disagree with what this one individual is saying. But looking at the rest of the week, we have U.S. retail sales, import price index. We got some Fed speakers talking. Wednesday, we got housing, building permits. We'll see how that is going along with lumber crashing. Let's take a look at Thursday. Initial jobless claims and the Philadelphia Fed manufacturing survey. I think those are going to be massive, but also the U.S. leading economic indicators. This also showed that we were in pretty recessionary territory. And that was probably 4 or 5 months ago, the last time that we did take a really good look at these numbers. So it's going to be interesting to see how these come out as well. And then Friday, just some more Fed speakers. So we just got a lot of Fed speakers, some data that isn't necessarily make or break the market. I think next week is going to be, if anything, more volatile. The beginning of next week, nothing. But we got GDP, initial jobless claims, PCE, personal income, core PCE, a lot of stuff happening later next week. So that back half of the week is going to be pretty heavy in terms of news. But I did mention that Jerome Powell did speak today, and I want to pull up this quote that we are seeing. This is from an individual on Twitter. Let me get this up right now. Powell, neutral rate probably has risen from inter-crisis era. Okay. Powell policy seems restrictive, but not severely restrictive. Jerome Powell's been saying the same thing for literally over a year, almost nearly 2 at this point. And there's no surprise that he's going to be talking like this. Now, the question is, he is hinting more so that they're in a pretty critical place right now. It's you're between a rock and a hard place. You steer one way, or you're pretty much shit out of luck. You don't steer at all, then the system's going to collapse from underneath your feet. This individual here, though, is saying that even once we start cutting, September is working assumption. It's going to be token cuts. The days of 0% federal funds rates are dead and gone. I completely disagree with this 100%, and kind of alluded to in the last thing I mentioned is that we are between a rock and a hard place, and we've kept policy restricted for far too long, and we're already seeing major breaks in the system, which I will pull up the earnings calendar next, and we can kind of take a look at where we might be able to see some of that come to fruition this week. But that being said, when we look at this right here, the days of 0% federal funds rates, I think that's going to be something that people are going to be shocked by, that we are going to get pretty close to zero. I will say that. what could entail that? It would have to be a financial crisis. So it would have to be something so drastic and dire to the point where credit is not being created that they're going to have to push the cuts down as fast as they can in order to make sure that they start getting that debt machine pretty much printing money. That's how the banks are going to be making money. We know that, credit lending standards right now are extremely tight. They're going to be tighter even when we are at some of those pretty key critical levels down low. So I think this is something that we're going to have to revisit in the future. But thing is, too, these aren't going to be token cuts. These are going to be necessary cuts. The problem with the market thinking right now that we are heading for a soft landing, and again, we are seeing these soft landing headlines kind of pop up all over around the place now, especially in the news media, print more so than I would say, television. But what we're seeing is people thinking the first rate cut is going to be healthy for the economy. We don't necessarily have the data that proves that. We more so have the data that proves that these rate cuts are a lag in the system, that it is going to take time before we can start to see the benefits of these rate cuts. So for the first few cuts, there's a good chance that we just don't see those impact the system by any means. So I think they're going to have to start cutting a lot faster and a lot harder. I think that, again, my base case, I know it's different from other people who may be watching or people who are on the show as well, that we end this entire, market cycle in a financial crisis. That would be the case, right? We would see those rate cuts come down significantly, would be consecutive cuts. It'd be very in line with what Citigroup was actually saying that they expect from September onwards with 8 straight consecutive cuts. So that being said, let's talk a little bit about what we're looking at for the week ahead in terms of earnings, because I think that's the more important part here. It's a big earnings week. Nothing's hitting. We had Goldman Sachs today, but that's nothing that we should be too concerned about. I think they did pretty well in their earnings, but we had Goldman Sachs and BlackRock, First Bank, a couple of mainly banks right here in the first part of Monday. Tomorrow is going to be interesting because before the open, we get Bank of America, we get Morgan Stanley, Schwab, PNC, all banks that we know had, especially PNC and Schwab, pretty significant levels of FHLB loan exposure, and that was as of last year. I think most of it was under a year. So as they pay some of that back, or they pay it all back, what's it going to look like, especially if deposits are also going down too. I think these mid-sized banks and these regional banks are going to show really how well they are performing right now. And again, we've had 2 quarters already in this year that have gone through. Even third, I would say even the fourth quarter had some really bad numbers, but specifically the first quarter, and then we'll get Q2 and tomorrow, obviously those earnings, and we'll see how they're performing. I would assume that it's no better than they performed in Q1, especially these banks as the rates remained elevated. Just how the system works, right? You're not creating debt. There's less models in which you can make money. Unless they're just all in on Nvidia for this entire run, I can safely say that there's a pretty good chance that we're going to see some of these banks, especially these regional ones that are going to be reporting earnings later on, problematic for sure. We got Discover and Ally. Discover, we're still waiting to hear if what was the bank? Was it Capital One that's going to acquire them? That might get blocked. We have no idea. We should hear before the end of the year, but again, that's been probably 3 to 4 months since that news has been broken. So we'll hear that Wednesday, but it does have some big ones. Johnson Johnson, I'm going to be taking a look at that. Allies are going to be important. U.S. Bank Corp for sure. First Horizon and Northern Trust. All banks need to keep an eye on, especially when it comes to exposure to commercial real estate. Thursday, Taiwan Semiconductor or supercomputer. I always forget what this company is called. TSMC. We'll see what they're reporting earnings. Netflix, obviously one of the bigger ones too. Blackstone's going to be interesting because even KeyBank as well Thursday. So there's a lot to be keep an eye on here. Friday as well. I just saw Fifth Third Bank. Yeah, Fifth Third, Halliburton, Comerica, definitely going to want to watch that one along with Huntington and Regions. So these are some big banks that have exposure to the FHLB, which we talked about last year and pretty well this year too. Let me stop sharing my screen now. So that's going to be definitely impacting the markets. I think more so in the months to come. if everything lines up with the VIX and things that we've talked about for a period of time, it would be that late August, September, October area where we start to see, major cracks in the system. This could be the beginning of that, where we start to see some of that distribution into a sell-off. We'll see. All right. We don't have the numbers yet. It's just a lot of things that we should be keeping an eye on. I'm still very much hung up on the banks and seeing how they're performing, because 5.5 for as long as we have is not a sustainable way for, these banks and let alone consumers to survive. That out of the way, let's talk about the markets. Pull up trading view, take a look at the S&P. So the markets were up a lot earlier, the futures markets, and they're still up. We can see this is the 4 hour. Let's go to the daily. There we go. You can see that we opened up roughly 56.37. We went as high as about 56.67 or so. And then we got this wick all the way back down. Now we're just hovering around 56.41. So from when I saw it earlier, it was about, I think I saw it like 50 points or so that it was up on the day. Another sell-off once again. We're getting these really big wicks on the upside. So there's definitely a lot of selling that's going on in these areas. And when I zoom out, obviously this is a stupid chart, but you can see how much the price has just been pushing up. The volume has been low or decreasing. We're actually getting more volume on the sell pressure than we are on the buying pressure. However, the price is still pushing up. It's going to be, when the S&P turns, I think it's not going to be pretty. I genuinely believe it's going to be pretty nasty. We're going to be looking far below where we currently are. However, since there was no black swan that happened over the weekend, and I'm glad to see that. I'm glad to see that we didn't have any further incidents after that, which is good to say. That probably was a major black swan that was averted. I don't necessarily know how the markets would have reacted. So the leading candidate going up against the candidate who's been, scrutinized for the past few weeks or so since the debate about the ability to run for office, losing in the polls. Now the other candidate, the top candidate, just by default, if Trump were to die, or if he were to have died in that tragedy, that would have probably spooked markets, because then you can pretty much price in that either it would have been a Biden or at some point maybe even Kamala Harris as the president of the United States. How would that impact, economic policy, foreign policy? There's a lot of questions there, and the market is extremely frothy and overbought. And I say that without, I'm not saying it with a grain of salt. It really fucking is. You can see how many green candles you have, and you can see how the volumes have just dropped off here, and we're at 95 and 86. This market closes another green week. Good chance that we could be in the 100, close to 100 on that point, or at least be in both 90s for the stochastics. We look at the monthly. You're still dangerously high on the monthly in the S&P. That's 98 and 96. Let's say the last time we were at 98, 96. We weren't even there back in July of last year. And when that happens, we had, let's see how many months we pulled back for. We had 3 months of pullback, but we went as low as about 11% back. So, and that was at 99 and 85 or so. No, 87.68. By the time we got to here, it was 99.85, but it was already pulling back. So, even here too, we look at December of 2021 when we got into this range, 85 and 91. How many months have we put in a row that was just down? Quite a few. And then by the time we got to the October low, the market was down 27, almost 28 points. 27, 28%. So there's a lot to, it's in a pretty dangerous territory in terms of how far it's overextended from the 50 moving average. And the question is, if it does hit the 50 moving average, does it hold, does it bounce, or does it go underneath and go towards the 200 moving average, right? 200 moving average is sitting at 28.32. 200 moving average actually hasn't been tested since September, October of 2011. And if we are looking at financial crisis, then you can see that the 200 moving average didn't even hold when we look at the monthly chart for the S&P. It actually went below it and it dipped below it. So, testing one of these moving averages and seeing if they hold is going to be pretty vital. And worst case scenario, it touches the 200 and doesn't hold, then we're probably in the middle of a financial crisis, right? So, that's the danger of having just the S&P being so heavy up here, and again, so concentrated in those seven top stocks. We got news from Bank of America last week saying that the top, I think it was like, of retail's portfolios, they have exposure to about 36, 37% of the Mag 7. And that shows you that retail is all in at the top of this move, and they're continuing to buy low volume. We know the buyback window is in the blackout. We're seeing the CEO sell off. Jensen Huang sold off another 30 million or so. I think he's north of 250 million at this point. We're getting to that point where distribution is doing pretty well. So I think a lot of people, given what's happened over the weekend with Trump, are expecting a Trump presidency. They're trying to price in the market. As of right now, it seems likely that he would be the president, and based off of the polls, and is willing that he stays healthy, and there's no major, I guess, scandal or chaos or anything like that. Markets are probably going to start pricing that in now. Will the markets be doing it, or will be retail be doing it? That's the question we have to have too. Looking at the Nasdaq itself, it's very similar to the S&P. I think the two are correlated for the time being. But if you look at something like the Dow, I think the Dow has a pretty good chance of pushing up to that 41.5 level, which I think might cap out the move to the top. That being said, I think we could even see a really good rally here in the Russell. And again, I'm looking at the monthly. Let me look at the dailies. The Russell is in this channel. I mean, this is a pretty stupid chart too when you look at the Russell and how much it's moved up. You got a lot of gaps here, and I have a funny feeling those will be filled. And again, this is the thing with these channels that we trade in. When you do break for them, you break pretty hard. Where our target is for the Russell, if we're looking at this as an ABC pattern, ABC corrective pattern, I think that it's a pretty wild area where we can see the Russell go. It seems like it's played out. This is like a WXYZ or something in the middle here, corrective pattern. I still think that there's a good chance we could see, 14.55 versus this gap down here, which would take us to about sub 1,000 for the Russell. Again, financial crisis. I still believe that there is some type of black swan out there. I just don't know what it is. You can't time it, but the VIX is telling us that there's a good chance we will see a financial crisis or some type of major market moving event that causes the VIX to spike and the S&P to probably drop significantly. Whether that's a market correction or there's something that comes out that we just don't see right now. We continue to coil in the VIX, and it's pointing towards September, October. So that's going to be interesting to see how this gets closer to then. Is that a time to look at some, exposure to the VIX? I don't necessarily know. I'm not looking at anything with the VIX until maybe August, late August into September, with a few months horizon, just based off how things have traded in the past, right? We're going to break out of this August 2024, it looks like, in this triangle. And we know that once we break out of it, we do tend to see these major spikes, these major run-ups, and we continue to talk about it because that's just what happens in the market. It's not guaranteed, but we can see that there have been some major gaps or major pumps that we've seen in the VIX once you break out of these triangles. So once that resistance is done for, you're going to be pushing up, likely if history repeats. Now, let's talk about crypto right now, and then we can wrap it up because I've actually gone on longer than I have, and I'm ready to knock out. But crypto, for the time being, the market is pumping. We know that Bitcoin is pushing up. A lot of people are betting on a Trump presidency, and that's going to be good for the crypto market. I'll talk about DJT in a second, but this is where we stand. You're above the 50 moving average. You were getting close to a death cross on the daily. Now, there's some problems I do have with this, and that is that we tend to see these pumps right before we get a death cross. People feel safe and assured that everything's okay, and then you get the push to the downside. So the thing that I'm concerned about, because I don't believe in this move to the upside. I do think that this will be retraced at some point. When I have no idea. I need to find out whether we are looking at this as an A, B, C. See, I don't like that structure. I think it looks like crap. This could be the ABC, and we can say that's the height there, and that's our ABC. I don't necessarily like that one either. Or we could say that this is part of a larger structure, and this is a 5-way move to the upside. I don't like that one either. It's a really weird move here. You know, time if time holds true, you can see something like this. I mean, that's possible, but I think we need to see how this plays out. And maybe I'll pull up CoinGlass real quick before we jump off. Uh, but I would expect another 5 waves down. I think that we still have to test this $52,000 level. I think it's maybe weeks, if not. I mean, it can come at any time, but I think it's weeks away from us retesting that 52K. I do think that this is a rollover, and this is a bit of a bull trap here. People are really pricing in the fact that they think Trump's going to be president, and that's fine. But the financial system itself is in pretty much ruins, and we got to understand that there's a good chance we could see a huge outflow of money from equities into treasuries. I still think that the long bond has a good chance of running up here, but when you see that money flow out, people start selling because they're afraid that they're not going to have the value that they once had yesterday, and they just want to get out and take profit. And some people are going to need that money. So me seeing this here, I think it's speculation. There's a good chance that we could see this reversed. Let me pull up the CoinGlass now and see how people are trading this thing. Yeah, see, let's pull stop screen. Seems like there's a lot of shorts out there, actually. Interesting. So pulling up the funding right now, you see that on the 1 day there's a lot of green out there, which tells us that people are shorting the market itself. If it was red, people will be max long. Let's take a look at where the liquidations sit then. Liquidation. No, we want the map. There we go. So a lot of people are shorting this market. It looks like we got a lot more liquidations if we go down as opposed to going up. So a lot of people were probably longing down here. That's actually pretty interesting. I would assume they would have been the opposite, but looks like there's a lot of people who are still long, and now the shorts are kind of coming in for crypto. Like I said, that 50, that jump that we get right before the death cross, that push in price up, there's a good chance to trap people because, it's above the 50, it's going to continue going. It's a weird structure, guys. Let's just put it that way. I don't believe that we're going to be pushing to all-time highs because people are pricing in that Donald Trump's probably going to be president. I think there's a better chance that we are getting trapped, and there's a good that I would say institutions and people who have lots of capital, or exposure to Bitcoin are probably going to be taking profits, especially if we start getting some really bad earnings this week. You start seeing that Powell maybe at the end of the month, given what our PCE or GDP numbers look like, seems like they're going to be cutting maybe at the September meeting. I mean, we could get a surprise in the July meeting. Who knows? But I think there's a really good chance that we could start seeing a lot of these things start to pull back, and liquidations might be in line with what's going on the funding rate side. So that's a really interesting thing I did not notice. We'll keep an eye on that. Anything else that we need to cover? I'm just talking out of my ass at this point. I'm exhausted. I got worked for the past 3 days straight. Let's look at DJT just to see how that opened up, because a lot of people were very happy to buy that this morning. It looks like there's a massive red candle now. Yeah, man, the name of the game is liquidity. That money's not there, that people are going to take profit. It's still up 30%. So, I mean, if you bought this on Friday, good for you. But, this thing shot up all the way. It was up 50%, I believe, to start the morning. Let's see, closed here. Yeah, literally 50.29%. Since then, it's pulled back 13%, went as low as 18%, finding support on the 50 moving average, which is kind of funny. Yeah, I think that was a given. Anything, oh my gosh, look at that volume that came in today. It's a lot of volume. So this was a bit of a crazy trade. There was no reason for me for us to even talk about DJT on the show or to look into it. It was not something that I don't think Jay Webb or I was all that curious about the stock itself. But again, very similar to like a meme. We're just starting to see news come out regarding Trump, and then you just see the price just shoot straight up. I'd imagine that this might go up in a bull market if he was president or gets elected president. But, looking at this today, this is, I think, very much on the news of what happened over the weekend, and people are pricing in what they can. And clearly people took profit at the second they could, because we see a massive pull down. Let's see where that was on let's look at the 10-minute. Yeah, it was right on the open. As soon as the open, everyone started taking profits. So a lot of people in the after hours or in the pre markets definitely got in, got out. Name of the game. So I think that's gonna wrap it up for today. I've been talking for a while. I don't want to bore anyone else anymore, but yeah, we're in a place that's really interesting. I think the tech stocks are gone and the money's going to flow into the small caps. It's nothing that new or revelatory, nothing crazy happened in the market. I keep watching Nvidia. I do think that there's a good chance that we got rejected from this and we could break from this, and we could be days or weeks away from seeing a pretty good push down for Nvidia. I think their earnings call is about a month away, so anything can happen in that time. But I mean, it's even possible just trading this channel kind of going sideways. This is just a theory, right? We had the 5 waves down, 3 waves up, 5 waves down is what I'm assuming. And again, we're using not the daily, but we're using the 4 hourly to kind of assess that. I mean, even the hourly, I think, was probably a safer bet there. Yeah, I would say the hourly is the better one, where we're kind of using the Elliott wave theory to see where we end up. But yeah, it seems like every chance Jensen has, he's selling, but at the same time, a lot of that money's flowing out of Nvidia, maybe into some of the other Mag Sevens, maybe into a lot more. I feel like into the smaller caps, but that's the name of the game right now. I still think that this is a very similar situation that we've seen before, kind of a rollover. Now we just need to see where this takes us. This takes us down to the 50 moving average from where we currently are for Nvidia. That's a 10% move to the downside, fills that little gap down there. So we'll see. All right, guys, I'm going to leave it at that. Hopefully I didn't bore you too much. We'll be back Wednesday. Hopefully I'll have House with me. Just try and get some guys on here. They probably won't have anything Friday or later this week. I think all of us are busy for that. So thanks for being here. Again, not financial advice. Do your own research. And just take it easy. Don't worry about anything too much. This market's going to do what it's going to do. But I don't think any of the greater macro conditions itself have lend itself to change given what's happened over the weekend. I think more so we're going to find out if anything has changed given how some of these banks report earnings this week. So stay vigilant in terms of earnings, and we will see you guys next time.